and welcome to the session. So today I just want us to talk about the second chapter, which we are mostly going to focus mostly on. I think that's 38, right? Yes, we are here. So what exactly I want us to take note of is the market structure, because if you don't know how to analyze and how to tell if the market is going up or it's going down or it's ranging, it's a choppy market, you may take trades on the wrong setups. So once you know whether you're on an uptrend or on a downtrend or a choppy market, you know what to do, right? Because this is very important, mainly because you cannot trade against the trend. Let's say it's an uptrend and you're looking for sales and sales and sales throughout the whole entire time. There are higher chances of you going to lose so many of those trades. So when it's an uptrend, you basically have to look for buys, right? That's what you have to do. And then on a selling market, you also have to look on for a selling chance. So we'll just get deep into the graphs that they just explained, and then try to find out the best method or the best way to explain everything. So on this particular session here, right, no, let me see if I wanted something to help me in explaining these things. So we can start with how to define a trend using market structure. I don't want to get too deep into the jargon because it's not really very important as much, but it does help you as long as you've read. I'm not going to repeat reading the same things that are written here. I'm going to explain. No, let me delete this. Okay. Move. Okay. Wait a minute. Is this thing? I'm trying to find something to help me explain. I thought this was an arrow and I'll just move it up. Okay, so I want us to first, okay, let me reverse all of these, right? Reverse. All right, I need it back again. Okay, now we're ready, we're prepared. So I want you to look at this structure that has been drawn here, right? And why they drew the red and the green line. I apologize, there's too much noise. I am literally close to the border. That's where the Wi-Fi is. So this is what I am saying. So when they are pushing it on the upside, that's why we put the green candle, meaning they are buying bullish positions, and then the red arrow going down, that's the selling position. Oh my god, these cars. Alright, so what I want to explain is what trend is this one and how to locate if it's which type of a trend, right? So as you can see here on this box, on this chart thing, on the graph chart on the right side, as you can see here, they have demonstrated what exactly is happening on the left side. So as you can see, since this side it's the candlestick patterns, it is trying to show you that this is an uptrend. And how do you see that this is an uptrend? Normally it is the higher highs and higher lows, right? What are higher highs? So can you see this point here? This point here is lower than this point. So if this, okay, I cannot see this. Okay. Let me reverse again and start afresh. Okay, so can you see this point is lower than this point? That's why we're saying higher high. So it's going higher and higher and higher, right? It's not going higher and lower and lower and lower. So that's how you can tell that this is not an uptrend. You can also use trend lines to see what the trade is or what the market structure is. But for beginners, in order for you to not get confused, because trend lines are very confusing, sometimes you may draw them the wrong way, but as you can see here, it's higher highs and higher lows, higher highs and higher lows, right? This is high and low, high, low, high, low. So the main reason why they are saying low, it is higher than this one, but it is lower than this one at the top. So as you can see here, let me explain using this. So higher lows, higher high, higher lows. It is higher than this one, but it's also lower than the top one. So that's basically how this is. And so when you're going to be drawing a trend line, you will start from here all the way, drawing it all the way to the top, and drawing it all the way this side, going all the way to the upside. So that's basically what this is. I'm going to look for a thing on the chart and to show you how this actually works, because this one you can see it, but some you may not see it you may not be able to see it. I'll also show you how you can use a trend line to demonstrate that part. So after this, okay. All right, so we're going to focus now on the downtrend, right? Setup. So how can you tell it's a downtrend? Can you see it's a slope going all the way down, right? So as you can see also on the right side, you have a chart here that shows you how to tell if it's a downtrend. So you've got lower high and the lower low, right? This is low, high, higher than what? This low, right? This is lower high and what? Lower low, lower high and lower low, lower high and lower low. So it is going downwards, right? Normally you can just see this from the way you open the chart to check it. This is a downtrend or is what's an uptrend, right? Because of how the pattern is going to be formed. Can you see this? Clearly you can look at it and see that this is a downtrend when it's going down. If it's going up, it's continuously going all the way, creating setups like higher highs and higher lows. So let me move on to the next thing, and then we'll go deep into the charts so that I can show you. So the most simplest way to see when a trend is going to be broken is, right, on an uptrend we need to be creating higher highs and higher lows, right? Higher highs and higher lows. So we need to be having these higher than the previous highs, right? And so when you reach a point like this where it failed to create a higher than this one, can you see here, this is higher high, but this is lower than the first one. So that's when you can see that the trend is what is about to change, right? As you can see here, same thing, it went below the lower low, right? The lower high, it crossed over, and then now it's on the on the lower low. So that's when we change into a downtrend. We have a higher low and lower low. That's how you can change. You can see the change in the structure. It's really simple. Like if it was meant to be going all the way high, I'll show you when you're drawing a trend line, right? If you draw a trend line here, once it crosses the trend line, start to create something like this and not continuously go all the way up, because from here we expect it to come here and then strike up, come back and strike up, right? But then it didn't do that. It struck back down, kind of ranged a bit, and then it broke out of the structure. This is the structure that was created, and it broke out of it, and then we started to create another a downtrend chart pattern. So that's really the main major things. Let me go to a ranging market, and then we'll go dive into the market. Alright, so when we're talking of a ranging market, right, we are talking of a market that's literally not either breaking up to show you it's an uptrend or going all the way down to show you that it's a downtrend. As you can see, when we are speaking of this particular one, you can see here, this is a ranging market. Comes down, comes back up, comes back down. So it plays within the trend line, the support and the resistance that you would have drawn out. So it cannot go above or anyway outside. Once it breaks out of that, that's when you can tell your buy entries. Once it breaks out there, that's when you can tell your sell entries. You never know what happens. Once it breaks down, it can continuously form a downtrend, or it can just come out and then reverse back and start again until it shoots back up. So normally when it's doing this, it cannot go through this area. That's a ranging market forming something like this using a ranging market. They are playing within these boxes, your support and resistance. So how you draw your support and resistance, I will also show you that when we are now doing support and resistance lines, right? So that you can see if this is a ranging market. So you draw this, can you see a support and a resistance? Really, you need for it to touch 2 or 3 times. As you can see, 1, 2, 3 times. It touched the same area, touched even way more, like 1, 2, 3 and 4 before even coming to this area. So you would know, it's failing. 1, 2, it's failing to do what, to break out of the structure. So that's how you would be positive that this is what is a ranging market. Do you see what I was talking about? This is a range, right? Once it ranges, you never know what happens. But once it breaks out to the downside, like I said, that's where you take your entry points. Once it breaks out to the upside, that's where you take your buying point. So the main reason as to how you calculate even your TP and your stop loss here is your stop loss will be above the range, as you can see here, and then the TP would be measured by how the drop was, how long this drop was, right? So let's say this drop here at the top, right, it dropped from this point all the way here until it created a range, right? So how you're going to take your TP is you measure this. You can also take a rectangle, triangle, you draw it, or you just use a trend line, you just measure it, and then you put it on the on the lower time frame, on the right below the break, and then you can easily see where your TP should be. So as you can see, this is where this is. The last one would be a choppy market. As you can see, this is a very disgusting market. You never know what is happening. It is either reaching the below, or it's not even touching your trend lines, or even here your support and resistance. It is just playing and creating, repeating things, and just this is like the worst place for you to ever trade. Look at this. There is absolutely nothing that you can trade and it can give you something really good. Mostly this is not advice for any trader to take or to partake in any of these trends, because you will definitely suffer if you try to trade these setups. I am pretty sure you had read and came up all the way till on here on the strong trends, is also on the weak trend, as it is also clarifying here on the chart that your trend should be something. If it's strong, you see it by the way that it's going to reverse, right? When it's retracement, it's just a pullback and then it's a shooting back up. So what happens is it does not reach your previous resistance line. It doesn't reach it. It doesn't go back all the way to that area. It just retraces a bit and then shoots back up, right? As you can see, the medium trend, it literally goes back to where your resistance or support line was, and then that's when it can also go there. Then the weak ones, they literally, let me show you the weak ones. As you can see, they go below that resistance or support line, and that is the worst to trade, right? You normally have to avoid trading those kind of setups. So this was just showing you how you can test the market, how you can enter in such an area like that. This is a really beautiful setup because it is a formation of a W. If you can see, there is the W, and once it breaks out of this, definitely take a high. And if you want to check the profit or the TP that they measured with this distance, this raise and then consolidation. Some may say this is just a range, and then once it breaks out of the range, you definitely take your TP, and your stop loss will be below this higher low, just as the same as this one. This pullback, this pull up is the same as your TP this side. So this length is the same as this length. So that's definitely what you would have to do. For me in particular, I would advise you to trade the strong trend patterns than medium or as well as weak, because you would lose so many of your entries. So the other thing that is good is for you to trade consolidations or the breakout of a ranging market, right? As I have shown you here, that for a ranging market, once it ranges like this and like this, if it breaks out of here, you take your buys and then you win. So how you take your buys is you measure the distance that it took for it to come and consolidate in this area before breaking all the way out, right? So that's what you're going to do. and that's how you are going to what to focus on this. So once you have understood this, let me try to post this video, and I'll send you a link for you to just watch, because breaking it all the way down, it will take some time. So let me do this, post it, send you a link, and then let me go again and record another screenshot of the what of the analysis. I'm going to use a laptop in order for you to really understand, because the phone sometimes you may not see clearly.